Good day, everyone. So in this video, we're going to look at dollar index. We're going to do sort of like a third quarterly review and focused to see where dollar index is likely going to trade to, or what really is going to happen in the markets in the coming third quarter. So we're already in the third quarter, and with that said, you can see how dollar has rallied to the upside. So in the last detailed analysis that we did regarding the dollar index, that was almost like 2 months ago, we were expecting dollar to trade right around the 106 108 price point, which is where dollar has traded to, and it has already shoot up just above 108. So if we look on the monthly chart, we have to look on the monthly chart, you can clearly see we had this imbalance here, right? This imbalance on the monthly chart, which dated back all the way to 2002, has been broken out to the upside, thereby signaling a very strong dollar. Right? We can all say dollar is strong, dollar is this, but if we don't know how to apply it now on the charts or on the assets that you're looking to trade, then this whole analysis will be pointless. But I'm sure by now you now know how to react to your currency pairs in regards to how dollar is moving. So dollar rallying to almost 109, above 108, has brought parity into US euro against the dollar. So with that said, we've been preaching since February, I think, guys, since February, March, before the first quarter ended. We were looking at parity as our ultimate yearly target on euro USD, and we've reached that target 6 months down the lane. So yeah, it's always good to take a moment and look at what the analysis has brought forth and see how we can improve on it, right? So that's your assignment on a personal basis. So looking ahead to August, September, October, and November, which basically means that's the close of the year. We're not going to talk about December. So that's August, half of July, then August, September. Third quarter is done. Then you get October, November, and December for the fourth quarter. Looking ahead, right, I'm still expecting a strong dollar up until most probably mid-August or end of August. Now, the reason why this video has taken quite a few days to come out, guys, is because I was waiting for the inflation news. Number one, I was waiting for the jobs report that came out on Friday, right? And I was also waiting to see if we're gonna get any reaction from the ECB with regards to Euro USD trading below parity. Now, what that means is there was no way I could have forecasted where dollar might go without those fundamentals. Like you can see the CPI news that came out, it came in very hot today, like 9 point something percent inflation in the United States, and forecast was merely 8.8. So that's a very hot CPI news for the dollar, which does not look good, right? It's not looking good for the markets right now, and for the Federal Reserve to curb that whole aspect of economics, that whole inflation rising, how do they handle that scenario? They're gonna have to increase their rates like massively. Like the FOMC meeting now, the rate decision for the Federal Reserve this month, we're almost looking at 100 basis points increase on those interest rates, right? So yeah, guys, I do apologize. I'm gonna be doing a lot of talking here. Then we're gonna go to the charts just for like a minute or so, highlighting the institutional order flow where we need to be focusing on. But for you to understand the institutional flow, you need to understand what is gonna move that market, what is gonna move the dollar to 110, what is gonna move the dollar to 111. So with the hot inflation news that has come in and with the NFP report, it's paramount now for the Fed to really be aggressive on their uh, rate hiking cycle. So right now, 75 basis points is priced in, right? We are going to get that from the Fed. Whether we're going to get another 25 basis points on top to make it 100, that's another story. But the print that we got from the CPI does look like we might get a very surprise 100 basis points increase on the Fed rate, interest rate. So we just need to keep our eyes open and be on the lookout or be ready for 100 basis points. But as of now, 75 basis points is priced in. So how is that going to affect the dollar? Dollar is going to move to the upside, right? There's going to be a huge expansion to the upside in dollar. Now, if we are anticipating dollar to move to the upside, to which levels of price? Where is the draw on liquidity on the dollar index? Now, you can see we have breached the imbalance from way back in January 2002. Now, look what's above that. We breached it and we had what? Drop, base, drop, your basic supply and demand. And that's where dollar is trading currently. Dollar is inside this last up candle before the drop. I'm talking about this last up candle here. That's where dollar is trading in right now. So when we look at that price action, you see this last up candle, huge impulsive move to the downside, validating this level as supply. So right now, dollar might retrace to the downside, but ultimately we should see 110, we should see probably 111, right? Once we reached these two price points, especially before the end of August, if we can reach that price point, uh, then I don't see anything that can stop dollar testing 115 or even 117, though those might be a bit on the extreme side of our draw on liquidity. So right now, bias on dollar index still remains bullish. Now, where then do we need to focus on if we are to say, okay, dollar is bullish? Now, I'm just gonna do this one here. Right, so this is our imbalance which was filled. Then with the breaker, see this candle here, June price action. That's a breaker. Market is now pushed to the upside. So for over a long term period, we've got a new level of demand. We've got this down candle here, which is our bullish order block. That's on the monthly chart, right? Now take note of 108 and 106. Those are levels that have already been broken to the upside. So those levels being broken to the upside, you might look for retracement to rebalance this imbalance here and then push to the upside. Now that retracement, guys, remember it will happen like on lower time frame, probably most on the daily or the H4 time frame. That's where you're going to get those retracements to the downside before another push to the upside. Now I'm gonna go to the weekly chart. Let's see where we this is 5 days. Okay, go back to my so this is the weekly chart, right? Once we are on the weekly chart, what do you see in terms of order flow? Right. So you can see the two blue lines. Those represent what? Bullish order block, right? This is my personal price action that I had marked. This is our bullish order block on the weekly chart. Yeah, I had to use Telegram for this analysis because MT5, it doesn't have uh, all the data dating back all the way to 2002, of which I need that for the price points. So now we've got 106 and 108, and price is just slightly above 108. Of course, today we have seen a bit of a retracement in terms of the bulls pushing price up on dollar. That was because of the negative numbers that we got uh, from the United States. So we've got our weekly bullish order block. Then we've got this imbalance here, which then becomes your crucial point. Now I'm going to go to the daily chart. Now remember, you have to also do this by yourself, guys, right? That way you are going to be more precise in terms of your analysis. Now you can see I've marked out this imbalance here. The reason why, okay, it's supposed to start from right here. This imbalance is coming in at the 106 price point. That's the imbalance. Remember, market is always drawn to inefficient price delivery, right? With inefficient price delivery, that's where your draw on liquidity is going to be. Now, the draw on liquidity here on dollar index, if it's to the downside, that is to run stops in the form of sell stops, internal range liquidity. You see, right now, external range liquidity is above 110 and 111. Now, you can see already today we have rebalanced the market. See, prices rebalance the inefficiency that we got here. So now, what will be the catalyst for DXY to move back to most probably 106, right? That's negative news coming out from the United States, right? If we do get negative news for the dollar, then we are likely to see dollar trading back to 106. Now, what is below 106? We've got internal range liquidity residing inside this fair value. You can see I'm now on H4. And once price reaches this area, this is where you are in a mode. You are in that mode now for you to be hunting for long entries. Now, this is the imbalance we had today. Prices dipped down and sort of like finding a bit of support, though we still have this liquidity void here. And price is likely to fill up that liquidity void before a push to the upside. Now, I'm going to go to MT5 now. Now, on MT5, which is where we trade, right? So this is the imbalance on MT5, right? That's the imbalance on MT5, and we've got a daily bullish order block here. So this is the levels that you are going to be looking at. Now, on the daily time frame, we've got this breaker here that's included in the monthly breaker. This is the daily breaker, broke above 105.50 institutional price point. So you'll be anticipating the bears to at least retest one of these areas here before a run of stops above 108.30, or we could see price deep down here, because the moment it comes to 105, price will be in discount for long entries. Price will be in discount for long entries. So I'm going to go to the H4 chart. So this is our daily bear bullish order block. So expect price to trade into this level here before we see another push to the upside. And then we've got that 106 price point here, which is this low here. Once price dips down into that, you're now looking for longs. How do you look for longs? Negative news for the euro, number one. Probably will be at that price level during FOMC, right? I'm not sure when is FOMC, but it should be sometime, probably maybe next week or the week after. Price will be inside this fair value gap, right? This fair value of price inside the imbalance. So as it is, right? As it is, guys, yes, there's absolutely no need for you to be hunting for shorting positions on dollar. There's no need. If you do so, you are really trying to go against the trend, because right now the Fed are quite a bit behind the curve and they have to catch up, and them catching up is by extremely increasing those rates at an alarming rate, right? So I urge you to do your personal analysis, and if you are stuck somewhere, send me the questions, then we can help each other. Right now I've just done a skeleton analysis so that you know why we are bullish on dollar, right? Of course, everyone knows there's war in Europe. Right now, Europe is most probably approaching a economic war. Energy prices are skyrocketing. Uh, node, node 32, whatever, node 2, that pipeline for gas is under repairs, yearly repairs or something like that. So there's no supply on that pipeline for the next 10 days, or maybe for the foreseeable future, because Russia, I think they've stopped supplying gas to Germany yesterday or the day before yesterday, I don't know. And that's only bringing pressure on euro. And if euro is under pressure, dollar tends to do very well. So there's a lot of things which are positive for the dollar. Yes, there is bad numbers also coming from the United States, but those numbers, we can practically just use them for price to return into fair value, where we're going to be hunting for longs, right? So for instance, if I go to investing.com right now, I'm just going to look at a calendar shortly just to give a perspective of how you have to approach the market. So you can see dollar retraced from the highs of today because of these crude inventories, right? You can see huge negative gasoline inventories. You see energy is moving price. So if we go back to our platform, so that's like around 4:30, right? Which is just a few hours ago. If we look at 4:30, where are we? So that's 4. That's 4:30. Look how dollar retreated to the downside. 81, almost like 90 pips to the downside from today's highs, right? That move to the downside, folks, on the back of negative news for the dollar. Now, this is what I'm saying to folks, that once we have a trade flow, this is what we are going to be implementing, right? Because most of you guys are now very good at technical. Anyone in this group, most of you is, despite excluding the guys who are yet to finish the mentorship videos, most of you now know and understand how to highlight institutional order flow and what to do. But when you're by yourself out there, there's always that hesitation. Say, should I go long? Should I short? You see, at the back of those negative news for the dollar at 4:30, there was no way you'd have kept on looking for long entries, right? Or price to push to the upside. You can see the 30-minute candle, right? Leading up to 4:30 is this candle here that moved. Let me see how many pips is this. This candle moved like 4 points. Imagine how many retail traders were buying there, right? A lot of them, you see, because this signifies huge momentum to the upside. Yes, dollar is bullish, but at the back of this negative news, you'd have already known, if you're in a mentorship, if you're a mentorship student, you'd have already known that, okay, we now have negative news for the dollar, 4:30. That's when this candle closed and this one opened. So this is most probably a run of buy stops. And because of those negative news, we're going to see a retracement to the downside. So when we are together now in the room, this should accelerate your knowledge, your trading path massively. Because I shorted USD CAD, I shorted USD CHF, and I went long on pound USD, I went long on Euro USD. You can even see the charts. Like around 4:30, I went long on GBP USD right here, and I got out with like 45 pips. That's when I went out. And then if you look at Euro USD, same thing happened. Euro USD around 4:30. You can see there. This is 4:30. Imagine how many people were selling after seeing these two 30-minute candles dropping. These two 30-minute candles dropping to the downside after the inflation news. Many people would have been shorting Euro USD, but at the back of that negative uh, oil, crude oil inventories, look how many pips Euro USD rallied, 88 pips. So this is what we have to be doing now. This is what we are going to be doing once we have the trading floor up and running. So far, I've got like a few guys already that I know will be definite for the trading floor. So with that now, looking at the calendar, you'd have already known that, oh no, dollar is gonna run a bit of stops here, and it's gonna go to the downside. So once you're on the calendar now, knowing that you're looking for dollar to run sell stops for it to go to the upside, when you see, say, the initial jobless claims tomorrow, maybe they come in positive for the dollar, and depending on where dollar is on the chart, see, that's where the decision now becomes crucial. This is the next part of your development now, which we have to tackle now. So we could see a bit of further moves to the downside uh, during the London session tomorrow. We could see there's nothing much for the euro, but though we have this news here, there's nothing much for the euro tomorrow during London session. So we could see a further move to the downside to rebalance this liquidity void here, right? So once that is rebalanced and we are now in discount, this created area, this is our daily bullish order block. Then you get positive news from the PPI, you get positive news for the initial jobless claims. Then you already know how to react. You already know how to react on dollar. It means longs on dollar index and shorts on shorts on Euro USD, Pound USD, Aussie dollar, and the rest, and then longs on USD CAD, USD CHF, and USD JPY. So that's pretty much about it, folks. Yeah, I didn't want to take this that long. Of course, there's gonna be ESCOM now in the next 10 minutes, so this video will probably be available after 10 p.m. So that's it in regards to what I'm anticipating where dollar is heading. So we are strong bullish on dollar index, and nothing at this moment is gonna shift that forecast unless if Powell and company have got other ideas. They are the economic giants. They know what they do with their currency. So we can only know that after FOMC for July. So yeah, that's pretty much in regards to that. So if you have any questions, guys, I strictly urge you to communicate with me. Even if you don't want to send a message in the group, send me a private message. Or Ivan, how do we approach this asset here? How do we approach this price level? Or dollar is doing this. How do we approach GBP CAD? See? Or USD CAD is like doing this and Brent is doing this. How do we approach that scenario? That way, you're going to improve quite quickly. So yeah, that's pretty much for today, folks, and I'll be giving out more analysis as we continue into the third quarter. So yeah, with that, I wish you guys good luck and happy trading. Thank you, folks.